Hello everyone, I'm Avadh. I'm dedicated functional consultant in Microsoft D365 Finance and Operation. And welcome to my YouTube channel D365 with Avadh. So this is the continuation video of the fixed asset. So in first video we have understood the basics of fixed asset. In this video we are going to understood the setups of fixed asset and how it will be useful and what are the meaning of this fixed asset setup will understood. Okay, so to start with, we'll first understand the fixed asset parameters. So for every module, parameters is the heart of the module. So we'll start with fixed asset parameters. So right now I'm going into the fixed asset module. In fixed asset module we have a setups. In setups we have a fixed asset parameters. So I have opened the fixed asset parameters. So here are some of the uh, important the setup we need to understand. First, allow multiple acquisition. So if I will click yes on it, that means there might be multiple acquisition for a single fixed asset. So what happens, like in manufacturing industries, will purchase a multiple spare part of the raw material and will add into the one fixed asset. So all the CVIPs will add into the one fixed asset, and that's how it will work. So this function will help into the allow multiple acquisition into the system. So consider threshold, capitalization threshold. We have one more option to use the threshold. So suppose in this is a INMF, so my currency is INR. So whatever currency in the system, we can define the capital threshold over here. I suppose here 5000 is my capital threshold, and if I will click yes, then only system will only calculate the depreciation if my fixed asset value is more than 5000. So it might be allow you to create a fixed asset for less than 5000, but it will not calculate the depreciation if the value of asset is less than 5000. So this we can use. I'm not using this right now. Apart from this, we have a option of allow the depreciation when place in service and disposal are in same day year. So if that is a case, like I have purchased the fixed asset on 2025 and I'm selling the fixed asset on 2025. So purchase and sale in both are in same year. But I have used that fixed asset for a 4 5 month. So for that 4 5 month, it will calculate the depreciation. So this is for the same. So at the time of the posting, if you want a details transaction, you can enable this feature. Otherwise, only one entry will be showcased at the time of the depreciation. uh, and these allow multiple depreciation for the same period. So suppose I am calculating depreciation monthly, daily, or whatsoever it is, sir. It is based on my calendar setup. I can calculate the depreciation. So suppose I have already run the depreciation of the December month, and if I will try to run depreciation for the December month again, December 2025, then system will stop me to do the same because of this setup. Okay, so right now I have not allowed multiple depreciation for the same period. Suppose if you are transferring the data and on the same cases you want some adjustment, you can tick mark yes, but most of the time I'm keeping it as a no. Then one more thing, like for India, we have a company, two type of the depreciation as per the Companies Act and as per the Income Tax Act. So the Companies Act, if my depreciation is, I mean, fixed asset purchase before 180 days, then it will calculate full depreciation, otherwise it will calculate partial depreciation. So for those setup, this is the setup for the same I have done here. And here I have written maximum threshold is a 50%. So As we know that there is no fixed asset that have a more than 50% of the depreciation, so I have just written over here that setup. Okay, apart from this, here purchase order, we need to allow acquisition from purchasing. Okay, so like here we have a multiple option to create purchase a fixed asset. We'll I mean understood those and those things in a next video. The all the way of purchasing fixed asset we'll understand in that video. So right now, this is the one of the um, way of purchasing fixed asset is allowing from purchase order. So I will keep it yes because I want to purchase fixed asset from purchase module. So most of the case in India, if we have a taxes in fixed asset, like we have a GST on that fixed asset, so there is a limitation of the fixed asset journal. We'll discuss in detail in next video. So we cannot use fixed asset journal. So most of the company in India is using purchase order to acquire fixed asset. So for that we need to enable this feature. Now we can restrict the fixed asset acquisition for a particular group that we can do. Right now we are not using it. Now generally, yeah, it is true that while creation of PO there is no because there is no entry of the system at the time of the creation of PO. So there will be no impact of the fixed asset in the system, but at the time of a product receipt or invoice, system will create a fixed asset. So that's how it will work. So this setup is for the same. Okay, and yeah, that's all about the setup. We can set it up the number sequence also here. um, Now we'll move into the setups, all other setups. So the second important setup is a depreciation profile. So how depreciation profile will work, we'll understand. So firstly, we'll take an example like of office equipment throughout the this lecture. We'll take office equipment as an based. Maybe we'll try to figure out another option also, but uh, we'll purchase all the fixed asset of office equipment right now. So what I have done, I have checked into the system that into the Income Tax Act, I mean Companies Act, that what is a number of useful life of this office equipment. So it is a 5 years. And what is a depreciation rate as per the income tax rate? So it is a 15%. So I have checked those two things, and I have written here that number of useful life is 5 years and depreciation rate is a 15% for income tax. Okay. So what I will do, I need to create a depreciation profile for 5 years and 15%. So I will create a one depreciation profile for as per the Companies Act for a 5 years. That is a here we need to understand one thing, that mm, that always Companies Act will use a number of useful lives, so they will use the depreciation as per the SLM method, um, and Income Tax Act will always use WDV method, where there is nothing but the weighted average method of the um, average weighted average method of the depreciation. Okay, so that is called as a reducing balance for a dynamics. As per dynamics terminology, it is a reducing balance. So these two things we know now. So what we'll do, we'll do the setup of the depreciation profile into the system. So here in a fixed asset module, we have a setups. All the setups are here only. So in setups, we'll go to the depreciation profile. So I have already created two things. Like this is my demo environment. This is so many people are using this environment, so I don't know what other setup is there. But I will always suggest whenever you will create a create a depreciation profile, books and fixed asset group, keep name as in similar. So now what I have created mm, this everything with the taste name. Suppose you are creating office and equipment, then keep name as an office equipment EQU, and now you need to enter for this is for a company and this is for IT. So so now after that, now you want to create for laptop, I mean for electronics, right? So laptop you can create like laptop companies as per Companies Act and laptop as per ITX. So same way you can identify and easily map those things. So always naming and everything is very important while you are implementing any project. So for right now I have used taste as in my benchmark, but you can use as per the depreciation. You need to understand a few things like this asset is belonging to with a fixed asset group with a depreciation type as per the Companies Act and as per the Income Tax Act. On the basis of the same, you can create the naming of the all the setup. So right now, what I have done, I have created one depreciation profile for company and one for income tax. So as we know that for Companies Act, we are using straight line method. So here we have a two option, straight line service line and straight line percentage. I am using straight line percentage. I have written here percentage as in 15. This is a generally in India we are using the fiscal calendar, that is nothing but the April to March here. So for the same and US and all we are using January to December. So for our convenience we can map those with our fiscal calendar and we'll use the period frequency as an yearly. Okay, so this fiscal depreciation, if it is a we have set it up as a monthly, it will calculate monthly and so on. So now we have income tax. For income tax also, like for income tax I have created one more depreciation profile, and here this is I think so 20%. Okay, my bad, yeah. So for income tax I have checked that the income tax rate for this is 15% for office and equipment. So I have just set it up this in this depreciation profile. So just for our knowledge, how I have defined the Companies Act percentage, because Companies Act will generally follow the number of useful life. Here, what I have done, whenever you want to define and you want to convert Companies Act rate number of useful life into the percentage, what you need to do, you need to divide the same in with a number of with 100. So now in this case, if my number of useful life is 5 years, so I will divide this with 100. So 100 divided by 5, it's nothing but the 20%. Similar way I can define for any number of useful life. Okay, and if you will not define all that, then also it will work with another setup. I will showcase that in further discussion. So these two things I have created as a depreciation profile. The second thing we need to understand here is like a book. So book is one of the most important setup. Um, so here I have created two books a similar way, the way I have created two depreciation profile. I have created two books. First is for a company and second is for a income tax. So in a company book I need to attach the depreciation profile of the company. That's why naming conversion is very important for our convenience, and we need to understand here that right now whenever you will use a straight line percentage, you need to always make sure, yeah, that you will select the day based calendar. So other things are not supported. You can see this kind of error you will face. So at the time of depreciation, as per Income Tax Act, you need to set up the day-based calendar. I hope you know the how to set up the day-based calendar. And here we'll post this to the general ledger, and by default every time the posting layer is same as in current. So this is all about the book of the companies as per the Companies Act. Now for Income Tax Act, what we'll do, we'll also calculate the depreciation. I will here attach the depreciation profile of IT, so it will calculate the depreciation as per the income tax. Okay, and here the new thing is we need to select the posting layer as an text. So for Companies Act it is a current. In system, every entry of the system will be posted in current layer only, but for a income tax purpose we need to file and we need to showcase the depreciation amount as per the income tax also. So for that we don't require the Excel and multiple tools. So for that Microsoft have given us the this kind of the solution, that we can use another layer and we'll post the entry in those layers, and it will be a separate from the our custom I mean current layer, and we can use it, and we can generate the trial balance from that, and we can use it for our for our income tax purpose. So here we'll post the entry to the general ledger, but the posting layer is different. As in tax calendar, we can select whatsoever we want to select. Now here we have a option of derive book. So what is the concept of derive book, we'll understand in this Excel. Like whenever we need to understand that um, we have a two type of books. Like first book is accounting book, and which will use for general posting purpose, and second is whenever second is income tax book. That books we file to the income tax. So here we need to understand, whenever we'll do any entry in accounting, my depreciation profile will be a straight line method. And my in case of the tax income tax follows I mean suggest us to follow WDV method, and this accounting is nothing but the Companies Act, and tax is Income Tax Act. So we need to follow those act. So Companies Act suggests us to follow straight line method, and here WDV income tax suggest us to follow WDV method. That is nothing but reducing balance method, for your reference. Okay. Uh, Now we'll create a book, two book. One is for our accounting purpose, and one is for a income tax purpose. This we have checked now. This will always posted into the current layer, and this will posted to the tax layer. So you can check here. That is that we have already discussed till now. Now, what is the concept of the derive book? So whenever we'll post or we acquire any fixed asset, whatsoever we have posted in my Companies Act and Income Tax Act, it is the same only. So cost of the fixed asset will be same in both the case. So what I will do, I will not post one entry two time. In first in a current layer, and second is in a tax layer. So to to avoid these multiple entries, and to avoid those kind of mistakes, what system will do, system will auto calculate, automatically post in what system will do, auto acquire this asset into the current layer and also into the tax layer. Okay, so that is a purpose of a concept of the derived book. Okay, now for the depreciation, if you will know, if you will see here, I have written here only transaction type acquisition and acquisition adjustment. I have not written the depreciation. Why? Because here the catch is like depreciation is separate for my income tax and my book. Okay, so I cannot derive same depreciation in both. So I will do, I will post separate entry for both the depreciation. That will see in later part in third video. So we have seen this like we have what I mean the cost of a fixed asset is same, so we can use the derive book concept for acquisition. Okay, but the depreciation is different in both the case. Here it will use a straight line method, and in income tax it will use a reducing balance method. So we cannot use the derived book concept in depreciation. So that is about the I mean biggest the concept of derived book, and book is a very important setup. On the basis of the book only, system will calculate the depreciation. So now once a book is uh, done, we'll go to the fixed asset uh, group. So here we have a fixed asset group. I have created one group, fixed asset group. This is my office equipment. You can We have taken one example of office equipment here. So I have created this group. Here we have an option of auto numbers fixed asset. So whenever I will select this as an fixed asset group, it will auto post the auto post auto I mean all the fixed asset which is purchased with this group will number sequence system will auto generate. So this what I have done, I have created one number sequence fixed asset equipment, and I have attached over here. So this will be a continue as per this. Now after this, here the major concept is um, in here we need to in fixed asset group we need to map our book. So here for this particular taste, I have created two books. So what I will do, I will here add those two book. Okay, so here I have added taste company, and here I mean once I will add the book, on the basis of the book, system will automatically attach here depreciation profile. And here also we have a number of useful life. I have written over here 5 years. Okay, and it is calculating yearly, so you can see a depreciation period as in 5. Now suppose if you want to now I'm adding here depreciation as per income tax act. So once I will select here book as an IT, it will I mean fetch the depreciation profile. And here for IT I don't need to write the service useful life. So that is all about the mapping of the fixed asset fixed asset books into the fixed asset group. Now we'll move into the another important topic. It's fixed asset posting profile. So we have majorly check all the basic setup which is required for the creation of the fixed asset. Now we'll move into the fixed asset posting profile. So so what we'll do here, first we'll understand the acquisition of the fixed asset posting profile. Here I'm clicking on the fixed asset posting profile. Yeah, in fixed asset module, set fixed asset posting profile. Okay, so in acquisition, we'll add all the, we'll do the setup. Here, we can do it as per the book. Okay, so now we have added two books. One is for a taste company, and one is for a taste income tax. So now I will add taste as a company. I will add all the group. Okay, grouping all. We can select here group wise also, as per our requirement. We can do here. I am selecting all only right now. Now I need to select the main account. So here I will select the main account, uh, and also I need to select the offset account. So what I will do here, right now I will use this office equipment main account, and also this is offset account I will use petty cash. Okay. So similar way I need to add another. So for this what we need to do, we need to understand what is the entry of my fixed asset acquisition. So here whatsoever debit is nothing but my fixed asset account. So you understand that office hardware is my fixed asset account, and my offset account is nothing but offset account. Generally we can use only in two case. First, when we are using fixed asset from as an manual acquisition, or we can use the fixed asset journal for acquisition of the fixed asset, then only we can set it up the offset account. Otherwise it will be a blank. Whenever you want to also want to I mean transfer the opening balance, then also you can use the offset account. Otherwise it will be a blank. So generally what is a my fixed asset acquisition entry? So entry is nothing but I am purchasing asset, so asset debit to bank or vendor. So temporarily I have in main account I have set up the that asset, and in offset account I have a two option. I can select the vendor and bank. So temporarily I have selected bank or petty cash account. So now if I need to set it up for a taste again income tax, right? For both I need to set it up. Similar way, you what you need to do here, you can see acquisition adjustment. You can add uh, book here, taste company, and taste income tax. So this is important thing. We have understood the posting profile of acquisition. This is based on our journal entry only. Now we are moving into the depreciation. So we have here another acquisition, another type is a depreciation and depreciation adjustment. So in most of the case how depreciation will work, it is like what is the entry of the depreciation? So depreciation to accumulated depreciation. So whatsoever is my main account is nothing but the accumulated depreciation, and this is my depreciation expense account. That's how it will work. Okay. So here we have not used multiple. It is okay. Maybe someone have changed this. So what I will do, I will add taste my book here, taste company, and I will use the accumulated depreciation for office hardware. Okay. And here I will use the depreciation expense for office hardware. Mm, just a second. Let me check what is a name here. Depreciation expense only. Okay. for a tangible asset. I think so. This is a okay. Let me check depreciation. Okay, we are using for same for all the depreciation. Maybe okay depreciation. Okay, tangible. Okay, no issue. We'll use this. And here also we'll taste income tax. You understood now that main account is my liability, and this is my expense account here in offset. Now will understood the posting profile of the disposal. So that includes the sales or scrap. What will understood now, so at the time of the sale, we have a two option. We can sell it out through fixed asset journal, and we can sell it out with the free tax invoice. So whenever there is a no customer, and we'll do the selling with cash and bank, so we'll use the fixed asset journal. That is only difference here. So at the time of the sale, what is the entry and how the system will work, what is the treatment, how will understood that first before moving into the understanding this setup. We need to understand that first, then only we can able to understand this properly. Uh, so in this case now, in a first video we have taken this test case, like the asset value is 1,000, my residual value was 1,000, maybe we can consider 0 also. So my depreciable amount is 9,000. So I mean calculate the depreciation on 9,000. This is SLM method. So every month, every year 900 will be deducted, right? So this is my depreciation and NAV. So after 7 years, I'm selling this fixed asset, okay, and my sale value is a 3,500. So here my net book value is a 3,700, and I have sell this 3,500. So I have a 200 rupees of the loss. So this is the transaction. So how system will post the entry into the system, we'll understand. Here, in case of the fixed free tax invoice, the entry is customer to sell off the fixed asset, and here it is like a bank to sell off fixed asset. So first entry is like whatsoever amount will receive from the customer, 3,500 will post entry for the same, like will receive the 3,500, so will debit the bank with 3,500, and the second is income account, sale of fixed asset, 3,500. Now till now 6,300 is my accumulated depreciation. So that much depreciation system have already I mean posted the entry into the system. So at the time of the sale, so at the time of the depreciation proposal, entry is a depreciation to accumulated depreciation. So that will be a reverse here. So here entry is like accumulated depreciation debit to depreciation with a total of a whole all the depreciation till now whatsoever depreciation is calculated, system will reverse. So till now 6,300 depreciation system we have calculated, we are going to reverse it. And uh, now there is one more entry, sale of fixed asset is now 3,700, it's reversal of NAV. Uh, so whatsoever we have selected here 3,700, it is a reversed NAV. This is my net book value, will debited. Now after that, my asset value, I mean sale value is a 3,500, and what is my profit and loss on this fixed asset is a 200. So that is how system will I mean post all the entries into the system. So in this case 200 is my profit and loss for a sale of this fixed asset. So I will set it up this so in system I have set it up the fixed asset sale entries. So what I have done here, we'll check. As we all know, system will follow the net book value for a sale and scrap entries. So what I have done, whatsoever entries I have posted For depreciation, so I have reversed in main account I have reversed I will reverse those entry, right? So in main account what I have done, I have selected the accumulated depreciation entry for this particular group. You can see here accumulated depreciation for hardware, and the reversal entry I mean offset account always will be a disposal of fixed asset or profit and loss of the fixed asset. And you can see here my offset account nature is a profit and loss account. See, profit and loss, the name might be different, like you can use here profit and loss of fixed asset or disposal of fixed asset whatsoever, but the nature of the account is profit and loss account. Now once whatsoever I have uh, I mean depreciate on prior year and this year, it will reverse. So for the same I have set it up the main account as an accumulated depreciation, and offset account is profit and loss or disposal of the fixed asset. Now in net book value I will enter in both same main account, profit and loss or sale of the profit and loss of the fixed asset. Now also for acquisition, whatsoever main account I have used for this, like office hardware I have used, so I will debit it, and for offset I will also enter the offset profit and loss of the fixed asset or disposal of the fixed asset, same thing. So offset will be a same for all. For depreciation I will write the depreciation accumulated depreciation account, and for fixed asset I will write for acquisition I will write the fixed asset account. So that's how we need to do the setup of the fixed asset book for a sale sorry fixed asset sale posting profile into the system. And this is one of the easiest way to understand the fixed asset sale entry and that posting profile. So now in next video we'll move forward for the fixed asset acquisition, how we'll do the fixed asset, how we'll acquire the fixed asset, and how we'll run the depreciation, we'll understand in the next video. And after that we'll sell the fixed asset also. So stay tuned for the next video, and keep watching the fixed asset series. And for all videos I mean first 5 video is very important for you. So thank you for watching this video. Thank you everyone.